Good morning, good morning. This is Prince, 18th of March 2015. How's everybody doing? Crude oil markets. Let's switch to our daily chart as usual to do our analysis. We've got consistent lower lows on the crude oil, no higher highs, no higher lows, nothing. Okay, RSI is still bearish and it has not entered into an oversold region. And there's a high probability we are going to break below $43 or even $40 a barrel, according to the current technical analysis. Alright, now we had a reversal box here where I expected the market to reverse. That also failed, so we're gonna remove it. Doesn't matter. So this reversal box, we're gonna remove it. So in general, also previously speaking, this was our February's trading range, and in the March we broke out of that range and we broke below it, so showing that the sellers, the bears, are still in charge and in control of the markets. So this one also doesn't matter, but what we can now do is at least we can draw another range. We can still consider this as the low of January and high of 15th February. We can still anticipate or assume that this is our trading range. The buyers and sellers will trade within this zone. So we are in the lows of the zone. So let's see if there are any reversal signs coming up. Okay, let's switch to our fast charts. So on daily daily charts, the market's trending towards the downside. We also have a trend line. We are below the moving averages. We are below the yellow and red moving average, 10 and 20 exponential moving average. This is a bearish intersection, bearish cross, bars close below, and yep, that's it. Another thing is market isn't oversold technically using the RSI. I don't use RSI, I don't need it, but it's good to have a double additional confirmation. Let's go to the 1 hour time frame. Let's mark our trend line. Okay, so it's a good trend line here. So yep, on the 1 hour chart, if you see lower lows, lower lows, lower lows, lower highs, lower highs, lower highs, every day we are breaking the previous day's low, showing sellers in control. Alright, now there are a few ways of how to determine if the buyers have gained control in the market, and one of the ways is we want this trend line is going to act as resistance. So what you really want to do is, because I'm bearish, okay, I want the market to go up, okay, be overbought here around this trend line. The moving average is to make a bear cross, yellow line to cross below the red line, so I can re-short sell and continue trending towards the downside. Okay, or if you want to buy, what you can do is put your buy stop order above the trend line to take a buy entry. But here's the problem. You see, this area right here is previous day high, and this is the day before it. So above the previous day high, buyers are in control. Yesterday they tried to push towards upside, but they fail at this level. So this is a very critical level. You can mark it. Mark the previous day's highs and the day before here. So it's best to put your buy stops above these levels to continue toward the trend towards the upside. Let me draw it for you just to give you an idea. Previous day's high, oops, the day before it, and the day before. So what you really want to do is, first of all, the market should break above this trend line. Aggressive entry, just put a buy stop here. Okay, so it can fill with other conservative. Let it break, create a pullback, let the sellers fail to make a new low, and you enter on the pullback to continue to trend towards the upside. Okay, one way to enter. Another way that I feel one of the other ways to enter is, yes, make sure we are above the orders placed above the previous day's high. If previous day's high is broken, then look for a pullback and then go up. Same is valid. And if you want to avoid, what you can do is keep this level into consideration. Let the market pull back again. Let the sellers fail. You can continue trading towards the upside. Buy a pullback. Buy around here. Sellers should fail. All right. New higher highs, strong, big candles, big buy candles showing buyers in control. This is if you want to. If you're feeling if the momentum is towards the upside. On 1 hour chart, however, you can see on the 1 hour chart the price is approaching the 10 and 20 moving average to make a buy cross, but we'll ignore buying from these lows because on our we're using daily chart as our trend line, our trend guide. So if there's a bearish cross, we look for short sell opportunities from the highs instead of buying from the lows. But right now we've got RSI pointing towards the upside, and if the market closes above on the 1 hour chart above the moving average, we are short-term bullish. It's good for scalping, but we're not scalping here. But what if we are failing now? Here's another strategy for you. What if we fail to trend? So this is what's going to happen. The sellers are going to come down here. It's going to pull back. The market's going to pull back to make the buyers are going to push to break this high and start trending towards up. They're going to fail, and when they fail, this is what you would be doing. You would short sell. You would start short selling the market again, and there will be pullbacks coming, and at each pullback, when you see these peaks coming up, you will short sell the market. Alright, this is for crude oil. So if you're not understanding it, let me make it easy. If you want to be buyers, buy above the trend line, buy the pullback. That's to be more conservative. You can put your stop loss below the swings. If you are investor style trader, you don't need a stop loss. Use a small lot and stretch it. Pyramid your position. You can even pyramid. Buy stop here, buy stop here, buy stop here. And this is one way. Another way, you buy here, buy another one, pull back, move your stop loss towards the upside. These are some advanced strategies. And if you see buyers higher high now failing, markets turning towards the upside, higher highs failing, then you look for lower lows and lower highs on your short time frame. This is my opinion for now on the crude oil market. And RSI, when it comes for a reversal, it should be in the overbought region. But forget the RSI, we don't need it. It's sometimes good, but like you can ignore it. Use the moving average. Moving averages are enough. Alright. So yep, that's it. If you really have itchy fingers, you can use 30 minutes chart for taking your trades as well. Alright, so that's the plan on crude oil. So what about the S&P 500? Let's look at S&P 500. This is one of your major trend lines. Wow. Let's stick a little bit to short term. You see how market bounced back? So what you really do is, but here's the thing. This is a daily chart, and the daily chart is still bearish. Once the moving averages, they cross bullish, or even sometimes you see there are additional compensating factors. You can break the rules sometimes. You can break the rules, but don't break the law. When the market approaches support trendline support area, you should look for bullish cross. So just see here, if you got a bullish cross here, if you would have entered, it's 214 pips. Again, there was a buy entry of 2000 pips. Cool, right? Right around the trend line. So hope the video helps. We are bullish, but let's see what's on the daily chart. How is the trend line here? Not indicator. Just need close. Wow. Well, what a trend line, huh? So there is a potential for the market to still come towards this side. But you have alternate option. One option you can buy here. If this buy fails, let it come down, then look for buy here. How you're gonna buy again, let me explain. This is how. If this fails, this should come down around this area. Remember, the market moves in symmetry. It will come in zigzag. It will not come in a straight line. So be patient. Pulls back. Seller should fail here on this trend line. Buyer should take control and start trending towards the upside. We've got the W pattern. Okay, so at this swing high, you're gonna put your buy stop. Look for moving averages, yellow above the red, 10 move above the 20 moving average. Some use 13 and 21, 15 and 30, but 10 above the 20 moving average curling up. You enter a buy, you put your buy stop and start trending towards the upside. How you can capitalize is, you can buy pullbacks all the time. Buy pullbacks, makes a new high, buy a pullback, pyramid your positions, buy pullback, use your rules. Okay, I don't like shorting S&P 500. I'm only buying S&P 500. So that is for the S&P 500. I'll also cover euro dollar for you. Let me switch to the weekly chart. This is what I'm saying. This is a monthly chart. We are approaching 75% area. This is the low from 2000. Okay, and we are strongly bearish in the European market. If you want to be bullish, what I see. This is the month's high, 1.12535. Okay, above this, maybe you should look for engulfing candle to see us, because when the problem with currencies, or a good thing, it can be good or bad. When the currencies start trading, they start trading in one direction for a very long time. All right, but let's add here RSI, insert indicators, oscillators, RSI, relative, where is it? This relative strength index. Okay, RSI on monthly is oversold, which is a good thing. Weekly, oversold, curling up. Daily, oversold, curling up. So here's what you do. Here's the strategy. Okay, do not start buying right now if you want to be a buyer. Look for yellow to cross above the 20, bull cross. Go on your 1 hour chart. Okay, not this bull cross. When daily is bullish, then look for bullish crosses on 1 hour chart to buy. Okay, but technically speaking or mechanically speaking, this we are bearish. Why are we bearish? Because we had this bear cross here, couple of bearish crosses on the daily chart. So now when you're going up originally, you have to follow the trend. When you pull back, if you are reaching yellow or red and the spikes are weaker, look for bearish cross on 1 hour chart. So what's going to happen is, like, this is what I'm trying to explain. You go up, you shoot up here, start looking for signs of buyers failing. There will be a pullback, maybe a new fake high. Okay, then they're gonna come back down. All right, and you're gonna use this swing low to enter a short trade, sell stop. But when you have to switch to 1 hour chart and look for the bearish cross. Let me move this. This is what I'm trying to explain. You can keep these lines just for a guide. So when the market's coming here, look for the bearish cross, and the market will let them come fail. Aggressive way could be only don't wait for the full M. Maybe from here you see a bearish moving average making a bearish cross, you can start short selling. This is aggressive. Otherwise, you can let them again, give another chance to buyer to make a new high and fail. Then below the swing low, you can mark the swing low, like I've mentioned. Below the swing low, you can put your sell stop and short sell it. But my bias for euro is bearish, strongly bearish. I don't want to buy right now unless the RSI there's a bullish cross on the daily chart and a bull cross on 1 hour chart. That's the only time when I'm going to start buying the euro. British pound. Let's go to the daily chart here as well. Quick analysis. British pound is bearish. This trend line was broken. There's what you can do. Two ways to trade this. This trend line is broken. What you can do is let the market pop up here. Look for failure. Two things are going to happen. Look for failure. It's going to come like this down directly. Okay. Or you get the point. Pulls back up. Bearish, and you can sell it. Short sell. But if you're thinking, I want to remove the thinking factor. This is purely a mechanical trading strategy, so I don't want to say I'm thinking or I'm feeling. It's best not to avoid that kind of thing. But there's another way how you can trade it. You go on 1 hour chart. Okay. Let's draw a trend line on 1 hour. This is your 1 hour trend line. Okay. Delete this. These are your previous day's highs. You see how there's a fake out here? This is another. You want a bull cross, a buy cross here, and you want the market actually don't buy here. Let the market break up above the previous day's high. Okay. Two ways again to buy. Let it make a pullback towards your trend line here. Okay, and let it fail. If it's failing, it should show a W pattern, and you can start. You can buy at the pullback and continue towards the upside. Now the problem is you have a trend line here which will act as a resistance and might give you a tough time. So this thing could either reverse and come back down and stop you out. But good thing is, if that happens, if the sellers have lost control, the buyers are still in control, what's going to happen really is maybe it'll stop you out first, and then what's going to happen next is they're going to break through this trend line. And here now you have again same rules. Here you place your buy stop, or you can again let it pull back, and that this pullback around this resistance which should act as your support, and there are new higher highs. You will see the pound is gaining strength, and the buyers are gaining strength here. This is how you can trend trade it. Buying the pullbacks, that's much better. It makes more money, it gives you even a clear place where to place your stop if you're scalping. Yeah, but it is very important to break above the previous day's high, having a buy cross, yellow above the red, and you use these patterns. Please refer to my YouTube channel and my trading blog. There are courses, there are video links that explain about the trading patterns, the breakout pattern, the wave pattern, the reversal pattern. You can see them. For personal training, you can also contact me. And to open a trading account, there is a link below this video. You can open a trading account with avatrade.com. I'm also working with them as an introducing broker. So please use my referral link, and my IB code is 34987. So it's good to give credit. Always give the credit where the credit is deserved. Always give the credit where it goes. So if you have any questions, feel free to contact me by email. You can leave a comment under the YouTube video. You can send me a message on WhatsApp, in our trading group, or in our Skype group. So I hope the video helps. I've covered for you the crude oil market, the S&P 500, the British pound, the euro dollar. If you have any questions, feel free to ask. Have a wonderful trading week. Bye bye for now.